Infra Credits gets $15 million infrastructure financing facility. Infra Credits gets $15 million infrastructure financing facility from African Development Bank. Naira sells 1,485 per dollar as official forex market records $23 billion. Nigeria boosts foreign reserves with $5 million from first gold sales. Oil extends losses as strong dollar weighs on commodities markets. Asia Pacific markets slip. Australia and Japan inflation data expected this week. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. Let's begin with solid minerals. Solid Minerals Development Minister Dele Alake has commended President Bola Ahmed Tinubu for support and reforms in the solid minerals sector, assuring that the National Gold Purchase Program will increase the country's reserve and boost the Naira's value, presenting the symbolic latest gold bar sourced from artisanal and small gold miners and refined by an agency of the ministry, the Solid Minerals Development Fund, to meet the London Bullion Market Association good delivery standard recently. Alake said the refined gold will be sold to the Central Bank of Nigeria to boost foreign reserves. Alake said this event marked the first commercial transaction under the National Gold Purchase Program. The centralized offtake scheme, supported by a decentralized aggregation and production network of artisanal and small-scale miners and cooperatives. He pointed out that this has increased the nation's foreign reserves assets and shown that using the Nigerian Naira to purchase liquid assets traded in United States dollars such as gold is a valuable strategy. Like he added that this transaction has also underscored the potential of the National Gold Purchase Program to enhance fiscal and monetary stability. President Tinubu commended the ministry for achieving a major milestone in the administration's drive to diversify the economy. The President acknowledged this as another concrete step towards the diversification process under the Renewed Hope agenda. Abuja Chamber of Commerce and Industry has called on the Nigerian government to urgently develop measures to stabilize food prices, enhance food security, and alleviate the economic burden on Nigerians. The Chamber of Commerce President Emeka Obegolu, in a statement, said the escalating food inflation crisis poses severe threats to food security and exacerbate poverty levels. In recent years, food prices have risen across Nigeria as farmers abandon their farms due to insecurity, emphasizing on the urgent need for the government to intervene to address the escalating food crisis. Warning, he said failure to act promptly could lead to a state of malnutrition and further aggravate the nation's socio-economic challenges. The Chamber of Commerce, however, calls for urgent measures to stabilize food prices, enhance food security, and alleviate the economic burden on Nigerians. Also, the Central Bank of Nigeria says with the moderation in the month-on-month headline inflation, which slowed for a third time in a row in May 2024, its monetary policy tightening measures enacted this year amid mounting inflationary measures are yielding the desired impact on the economy. This is as the Abuja Chamber of Commerce and Industry declared that persistent hikes in food prices were worsening poverty levels across the country. The Apex Bank noted that the moderation in the month-on-month headline inflation remained the clearest indicator that the contractual monetary regime it introduced was working. The National Bureau of Statistics had reported that the Consumer Price Index, which measures the rate of change in prices of goods and commodities, decelerated in May to 2.14% compared to 2.29% in April and 3.02% in March. However, headline inflation further increased to 33.95% in May compared to 33.69% the previous month. And to talk more on inflation, I have joining me an economist, Yusho Aliu. Thank you for coming on the program as usual.
Thank you very much and good afternoon.
Okay, you've heard for what the inflation targeting measures by the central bank. You just heard, just read out a report saying that they're actually particular about actually tightening and is actually yielding the desired effect. What do you make of this development?
Yeah, it's making desired result for the central bank, but it's not making desired result for the economy and the players in the economy. Okay. You have pointed out in your report that the Abuja Chamber's Commerce has also exacerbate and show their concern about the monetary policy in attempt to tightening the monetary supply. But I have said it times with that number, if we are to go to correlate month on month and then we take it as a yardstick over a period of time, not using the headline inflation, we are not going to have inflation control, because inflation is associated with certain macroeconomic variables since 1990s. And that is why today most of the attribute to high inflation, monetary policy is one. Two, so commodity supply is second. Insecurity is the third. And above all, removal of petroleum subsidy is also a factor. So when you take this into consideration and you doesn't show concern about what the rate of inflation is without looking at the income that the players are using to purchase goods and services in the economy, may not be a good step to addressing issues concerning high cost of living. And everybody agrees that we are facing cost of living crisis, and unless the prices are stable, which is the most important, definitely the cost of living crisis is going to be persisting.
Okay, you mentioned money in circulation as one of the factors driving inflation in the country. Now, the issue here is we've seen data from the central bank saying that a lot of these monies are not in the bank coffers. How does monetary policy becomes effective in this situation?
No. What I stress is that since 1990s, if you take 20 years experience of inflation in Nigeria, you realize that monetary policy is an inducement to the increase in the rate of inflation, because all economics differs. Different economies operate differently, and it has shown that there is no way tightening of monetary policy can be effective, because we are the ones that call the attention that using monetary tools to reduce money and supply, the money is not within the corpus of the government. And if you take back a look in 2023 when the Naira redesign was brought in an attempt to bring back the cash into the coffers of the bank, and which has also induced another different crisis which has not been experienced in the economy, you realize that we are not a proponent that using tight monetary control will reduce inflation, because if you check year on year, that is from May 2023 when inflation was 22.41% as against what it is today, 33.95%. The difference between that is about 11.54%, and there is no any considerable increase in income to either investors or consumers to that range.
Okay, now we had this conversation before now that we both agree that the fiscal authority will have to play a complementary role. And recently, the president has just signed an executive order directing the fiscal authority to suspend imports on on certain goods like staple food, and which includes paddy rice. How do you see this impacting or complementing the monetary authorities?
Very good decision by Mr. President. Looking at the cost of living crisis, government has to devise a lot of means, because Nigerian consumers are paying direct taxes and are paying indirect taxes, and import duties is one of which that contribute to the high cost of living in Nigeria. The staple food suspension for 6 months is not going to be clear in the in just 1 month. It will be more clearer when 2 months, 3 months, that is 60 to 90 days period, when importers have settled and import the right commodities, especially the paddy. I was in Zaria, a friend of mine with Hulhul, the international rice mill. There is no paddy, and he's ready to make production, and the production zones are not producing. So removing import duties on those goods and other equivalent capital goods that are coming on will definitely reduce price. But government has to also watch the scenario very careful to make sure that those that are benefiting from the import duty free are also extending it to the general market.
Okay, a lot has been said about insecurity. I don't know. Where is the place of technology in all this? How does technology close this gap? Do we so much depend on the farms out there that we have to go to farms? Where do we say, okay, this is the time that we use technology and increase food production?
Agriculture is modernized. Agriculture worldwide is not dependent on the crude method of production, and it does not also rely so much on what is called that is using human factor to make production. It is digitalized. So, and it takes process, and it takes government to put much investment in it, because most of the modified goods that are being produced are generated out of heavy investment by different economies. Take Dubai, for instance, of recent, that are trying to even, apart from the seedling, apart from the equipment to be used, they are involving agriculture to control the amount of rain to shower in different farmland. So, but I think there is need for government to harness security very well, to invest in technology very wisely. What I mean by to invest technology very wisely, we should look at the technology that will assist in the security management of our production lines, and also to take the right technology also to be applied in different economic zones of this nation. Remember, the nation is being diverse with over 90 million hectares of land, and we are only using only 5% of the arable land. So there is need for us to understand how we can improve the supply, not only using technology, but also to devise other means to include different category of security initiatives to bring about our production land into function.
Okay, the Central Bank of Nigeria is expecting inflation to moderate towards the end of the year. Do you see this happening with the current way, with the way things are actually moving? Yesterday, I asked the price of beans, and they told me it's 3,200 naira for mudu. I'm talking about food inflation that surpassed 40%. Are we actually likely to see the end of this at the end of the year?
There is a lot of shortages in the supplies. One of the basic factors since 1990 that is giving rise to high inflation is the low supply. If you don't have the supply and you don't know the actual number of consumers, we will continue to be beating around the bush, meaning that unless you know the categorization of consumers and the actual tonnage that is expected to service the population, we cannot get it right. Remember this morning also personally, I called for 100 kilogram of rice that is produced in Nigeria. It is 160,000 naira. So if you have 100 kg produced at 160,000 naira and we are in the production season and fertilizer is costing higher, PMS is costing higher, AGO is costing higher, and all the input variables are also costing higher, how do you expect price to come down?
Wow. Well, this is actually, well, we've seen the minimum wage. Do you think minimum wage has a role to play in this, making life much easier for the common man, looking at the cost of living at this point in time?
Minimum wage can only assist short-run purchasing power of some individuals. And these individuals require government to also look carefully in other things that will stabilize general price. Because whatever you increase in general price, whatever you increase as wage, will definitely not going to service what the MPR will do by increasing the monetary policy rate. Anytime MPR is increased, the cost of borrowing increases, and investor doesn't have any way to bring back such fund to take care of their borrowing except in the pricing of their commodity. So minimum wage is very, very significant and important because first, the reason why solving minimum wage is very important is to clear industrial disharmony.
Okay. Just before we continue the conversation, we would like to take a break, and Business Express continues after.
The Job Creation and MSME Clinics Secretariat coordinate invites operators in the MSME sector and the general public to the 6th National MSMEs Awards, scheduled for June 27, 2024 at the State House Banquet Hall, Presidential Villa, Abuja at 4 p.m. prompt. Special guest of honor, His Excellency President Bola Ahmed Tinubu, GCFR. Chief host, His Excellency Vice President Kashim Shettima, GCON. All guests are expected to be seated by 3:30 p.m. Announcer, Clemitola Adekule Johnson, MFR, Senior Special Assistant to the President on Job Creation and MSMEs.
Well, you're watching Business Express on the network service of the NTA, where we're having a conversation with Shehu Aliyu on inflation. Well, before I let you go, Mr. Shehu Aliyu, what do you think the fiscal authorities should do more to complement the monetary authorities?
There should be synergy. The Ministry of Finance, the central bank must be talking to each other and must be putting the policy coordination together. If that is not achieved, definitely we are going to be experiences such kind of distortion that the economy may not likely to enjoy. And again, also, I think the effort of Mr. President in addressing import duty suspension is also good, but there is need for the fiscal authorities to also carefully follow the process and assume the situation where all that has been said by the president is achieved. If it is achieved within 6 months, there is need also to rate the policy. If there is need for an extension has to also be given. Looking at the situation where we are moving into a new fiscal year by 2025 and it's coming with its own challenges, and definitely we need to resolve financial stability, price stability this year for development and growth to continue to be sustained.
Okay. Thank you very much, Mr. Yusho Aliu. It's always been a pleasure having you on the program.
Thank you very much.
Okay. Now moving on to commodities market. Let's now take a trip to that market and see what's happening there. Hello to capital market. Here is a summary of how stocks in Nigeria fared last week, as put together by Olaika Ojo. Let's see.
NGX All-Share Index and market capitalization depreciated by 0.18% to close last week at 99,747.05 basis points and 56.424 trillion naira. The market opened for 3 trading days last week as the federal government of Nigeria declared Monday, June 17 and Tuesday, June 18, 2024 as public holidays to commemorate 2024 Eid al-Kabir. A total turnover of 3.301 billion shares worth 53.157 billion naira in 27,536 deals were traded last week by investors on the floor of the exchange. The financial services industry led the activity chart with 3.040 billion shares valued at 46.362 billion naira in 13,695 deals. The conglomerates industry followed with 74.051 million shares worth 867.880 million naira in 1,906 deals. The third place was the ICT industry with a turnover of 44.909 million shares worth 1.412 billion naira in 2,136 deals. Trading in the top 3 equities were Fidelity Bank PLC, FBN Holdings PLC and Veritas Capital Assurance PLC. A total of 10,876 units of exchange-traded products valued at 2.037 million naira were traded last week in 77 deals. For bonds, a total of 48,669 units valued at 42.884 million naira were traded in 28 deals. For summary of price changes, 53 equities appreciated in price during the week, 25 equities depreciated in price, while 76 equities remained unchanged. Olaika Ojo for Business Express.
Well, next is global stock market update, and Maria is our guide. Maria, is over to you.
Thank you, Musa. We have the European stocks positive Monday as investors look ahead to fresh economic data and interest rate decisions from the region. Monetary policy decisions come from Sweden and Turkey's central banks, while data releases include gross domestic product data from Spain and Italy. DAX appreciated at 0.59%, FTSE was up 0.40%, CAC reflected this at 0.70%. Asian markets have investors watching Australia's inflation data on Wednesday. Should inflation come in higher than expected and spur the RBA to raise rates, it would be the first major Asia-Pacific central bank to do so in an environment where investors are waiting for rate cuts, barring Japan. Nikkei climbed 0.54% at 208.18%. Shanghai Composite was down 1.17% at 35.04%. Hang Seng Index was marginal at 0.81%. For U.S. markets, Nvidia fell 4% last week after 2 consecutive declines of more than 3%. The pullback occurred after the chipmaker briefly dethroned Microsoft as the most valuable company in the U.S. chart. Analysts also pointed to bearish patterns in Nvidia's recent trading. Futures tied to Dow Jones is at 0.30%, S&P 500 at 0.10%. We have the Nasdaq Composite at negative 0.07%. African markets have South African JSE top 40 trading in the green at 1.18%. We have Tunisia's TUN index down by 0.06%. Namibia was up 0.16%. Ghana was marginal. That's a summary from the global market. It's all you, Musa.
Thank you very much, Maria. Well, things are looking good for the week. Let's hope it continues like that. Well, this is where we end this edition of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTA's channel. Business Express returns Tuesday by 9:30 a.m. I'm Musa Abubakar. Enjoy the rest of your day.